A JPMorgan Chase analyst believes that Tesla stock is absolutely going to crash through the floor for the remainder of the year. This guy believes that Tesla stock will go down over 40% over the course of the next 5 months. Yes, over 40% crash in the next 5 months, guys. We were talking massive. So we're going to look at what he has to say, okay? And then I'm going to bring out 2 points, okay? One more on the fundamental side and one more on the technical side on how you could actually get a stock to go down that much, okay? And we're going to look at this and how much of a realistic possibility it is out there. Everything in the stock market is possible at some point in time, right? Everything is possible, but how realistic is this? That's what we're going to look at. So hope you guys really enjoy this. Hit a thumbs up if you enjoy. Let's get in this. So JPMorgan, look at the headline. JPMorgan predicts Tesla shares will plunge more than 40% before end of the year, all right? Tesla shares will fall dramatically the rest of this year due to its high valuation and rising competition, according to JPMorgan. The firm reaffirmed its underweight rating on Tesla shares, saying other automakers may price their electric cars aggressively, all right? They're gonna price their electric cars aggressively, the other guys competing in this space. Tesla has a highly differentiated business model, appealing product portfolio, and leading edge technology, which we believe are more than offset by above average execution risk and valuation that seems to be pricing in a lot, analyst Ryan Brinkmark said in a note to clients on Friday. We have highlighted more concerns regarding increased competition, including from automakers looking to use the sale of battery electric vehicles to subsidize their more lucrative internal combustion engine portfolio vehicles from a legal, regulatory, and compliance perspective, rather than trying to generate profit on the sale of these battery electric vehicles in of themselves. Brinkman reaffirmed his $180 December 2018 price target for Tesla shares, representing 44% downside from Thursday's close. 44% downside, okay, by December. He thinks this is going to 180 by December, okay? That would be quite a substantial move down there. Analyst is cautious on the company's second quarter financial results. It is slated to report its June quarter results on August 1st, according to its website. Tesla said on July 2nd that it had reached a one-week production goal of 5,000 Model 3 cars during the last week of June. This is coming from the analyst now. We continue to be concerned that the free cash flow has a potential to be a larger outflow given the fact that the much heralded production rate improvement, he said. Additionally, we worry about margin given the potential for overtime, premium freight, and other expenses employed to ramp production in a seemingly inefficient manner, he says. Tesla didn't respond to comment, okay? So, what I want to talk about now is I want to talk about the fundamental point he brings out, and then I want to talk about like a 40+% downside move in 5 months. Like how realistic is that? Like how could that potentially happen, okay? So, in the simplest terms, he believes that Tesla demand will fall because other guys, okay, the competitors will compete on price, okay, and they'll be willing to lose more and more money on their cars, which will make their sales go up, which will make Tesla sales go down. That's the simplest point he brings out, okay? That's his fundamental point. Now, we got to keep a few things in mind with this, okay? The first is the competition, if you want to call them that, the other players in this game, they're all already losing lots of money on electric vehicles, okay? So they're already taking big losses in this game, all right? They're all taking big losses as of now. Also, we know they have hardly any demand. For instance, the Chevy Bolt, which was supposed to be the Tesla killer, is being outsold about 6-to-1 in North America by the Tesla Model 3. And the Model 3 hasn't even ramped in a major way yet, okay? And they're already being outsold by about a 6-to-1 margin, all right? So that's a massive difference there, okay? So these guys are already taking big L's. How much money are they willing to lose per car? Are they willing to lose $10,000 per car? Are they willing to lose $20,000 per car? Okay, these losses are getting big for the companies, and if their demand starts going up and they're taking these massive losses, eventually it'll start affecting their actual numbers that these companies report, okay? If their sales were to actually go up because of this, all right? Think about this from a perspective of These companies refuse to really get on the electric wave and take electric vehicles and autonomous driving seriously up until the last year, okay? Most of these guys have been laggards. When Tesla was focused on this stuff for the last 5-10 years, a lot of these guys have just started getting focused in the last year or two. So you're gonna tell me these guys that have pretty much no long-term vision to their businesses are all of a sudden gonna get a super great long-term vision and be willing to take $10,000, $20,000 losses each car sold? I'm not convinced of that, okay? Also, that's not even the biggest point. That's just one of the points, okay? Tesla, the fact is Tesla demand is through the roof, okay? We know that. There's no question about that. Here's the thing, okay? Just because a competitor wants to lower prices on whatever they're selling does not mean the demand for someone else is gonna fall, okay? If my iPad breaks right now, I'll be down to the Apple store within an hour, or I'll order one online within an hour, okay? I'll order a new iPad within an hour. Think about that from the perspective. There are hundreds of companies that make a tablet of some kind, the majority of which are far cheaper than this iPad right here. I'm not gonna go and get some other crappy tablet, some Android tablet or whatever, and be like, oh, I can save some money here. No, I'm going to get my iPad. If my iPhone breaks, I'm going to the Apple store and getting a new iPhone right now, okay? When I go to In-N-Out Burger, okay? You know how many discount burger places I pass? I pass at least one McDonald's on the way there. I pass Burger King, I pass Wendy's, I pass Jack in the Crack. I pass so many burger places on the way to In-N-Out, and they all have burgers that are cheaper than In-N-Out. I want In-N-Out, man. I want In-N-Out. If you want something, you're gonna get it, okay? If there's the demand out there for a product, people are gonna pay up for that product, okay? If there's demand for it. Doesn't matter if it's an iPhone, a car, anything across the board. If people are willing to pay up for it, it's because it's a better product in the end, okay? So until the competitors come out with a product that's even close to, as competitive as the Model 3 is in terms of looks, in terms of styling, in terms of interior, in terms of everything you can go into across the board, okay? That excites somebody about a Model 3 versus a Chevy Bolt, which, my goodness, you couldn't catch me dead in one of those cars. Well, if you did see me in one of those, it'd probably be because I'm dead, because I would never drive a Chevy Bolt. Like, holy smokes, like, I'm sorry if you drive a Chevy Bolt. Like, I straight up feel bad for you, man. That's very disappointing. So that's the first point. That's the fundamental case right there. Now, this guy's talking about 40% plus downward move for the stock over the next, let's say 5 months, okay? 5 months, and we're talking about a 40% plus downward move. Wow, that would be a big move. So you would need two things to happen, okay? You need buyers to dry up in a real way. I'm talking about buyers for Tesla stock, okay? So you would need, people just to not be interested in Tesla stock, buying more shares of Tesla stock, all right? Which is a pretty hard thing, because throughout Tesla's history, there's never been buyers that have dried up. Like, there's always more and more people investing more and more money. And when I'm talking about it, I'm not just talking about the retail inside, the average investor. I'm talking about big fund managers, all right? So to get all the buyers to say, we're not interested in buying Tesla shares anymore, it's possible, but it's pretty unlikely. The even more unlikely thing, if you're going to get a 40% plus drop in a stock in a very short amount of time, like that, 5 months, you're going to need huge investors to sell off their shares. This is possible, but here's the thing. Why would huge investors sell off their shares, okay? People are investing in this company because they believe they're going to be huge in autos, and they're going to be huge in energy, okay? And why would anybody sell out of Tesla shares if you're in the stock for the long term? Like why? Like, okay, let's say they're not able to keep a 5,000 production rate and it goes down to 4,000. Like, do you think that's going to magically make all these big fund managers that are super bullish on the stock be like, oh, they didn't quite hit that number there, so we don't want to own this stock anymore? No, these guys and gals that have invested hundreds of millions of dollars or even billions of dollars into the company, they're playing this for a long-term out future, okay? They're playing this for a long time in the future. They're not just like trying to trade it around and be like, oh, they missed that number over there, let's just sell the stock off, okay? So all things are possible in the stock market. Can a stock go down 40% in 5 months? Yeah, I've seen it done on a ton of stocks before. But is it the most realistic thing? I would say probably not, okay? Probably not. You're going to need buyers to dry up for Tesla stock, and you're going to need mass selling from institutions and huge fund managers and whatnot. And why they would just be willing to sell out of their shares wouldn't make much sense to me at that point in time, okay? Because you have a lot of demand for Tesla shares. So if it was to even go down under 300, what we have seen is there just, goes right back up over 300, okay? As soon as it drops down, it just goes back up. These type of stocks have long-term plays. It's hard to get them down, okay? Which is the same reason I won't short some of these other companies that I've talked about in the past that I believe are overvalued. A lot of these companies, I won't dare short them because it's so hard to get their stock prices down because there's so much belief from big fund managers out there that these companies are going to be huge in the future that they don't care about short-term results. Netflix missed by 50% on what their subscriber number is going to be in North America. Based upon that number, the stock should have been down 20+% the next day. The stock fell 5%, okay? It fell 5%. And on a day when it probably should have been, like, I haven't seen a miss that bad in a long, long time in the stock market. They missed by 50% on their subscriber number, and they missed bad internationally. It's been a long, long time since I've seen a number that bad, and the stock fell 5%, okay? Only 5%. That's like hardly anything, okay? So these type of stocks that have huge growth potential in the future, they're hard stocks to get them to go down in a major way. It's possible, anything out there is possible. I'm just saying it's pretty unrealistic. You need buyers to dry up. And like the fundamental case, Chevy Bolt, let's say they drop their price, or whatever competitors are out there, right? They drop their price. What's gonna make somebody go get that car? You know what I mean? Like In-N-Out's packed every damn day, okay? That drive-through is like a mile long, and I gotta wait, and the Wendy's drive-through is available, right? And the Burger King's got nobody in it, and the Jack in the Crack's got nobody in it, and I could just go right up there and get a burger for cheaper. I go to In-N-Out, man. It's a supply and demand economy, and sometimes I think these analysts forget about the supply and the demand, and when a company has a demand, it's hard to beat them, man. Ask the guys that compete against Apple. How many guys have come in and they're going to be the Apple killer. They're going to be the iPhone killer. Anybody that's followed electronics and technology in the last decade. If I could have $1 for every time I read an article in my life that said this is an iPhone killer, this is an iPad killer, this is a Mac killer, and whatever ended up happening, all Apple did was grow and grow and grow and get bigger and bigger. Like, it is what it is, guys. It's all about where the demand's at in the end. Anyways, hope you guys enjoy this. I want to know your opinion in that comment section. Do you believe this stock will fall 40% over the next 5 months? Do you believe it will rise 40%? Do you believe it will be a stagnant stock? I would love to hear from you guys, as always, in that comment section. Thank you for watching. Have a great day.